All right, we are here on another episode of Real Estate with Doug. I have my lender, Todd Hennessy, with Cross Country here with us, and we're just going to talk about a lot of different things. We're going to talk about things like should buyers wait for mortgage rates to come down? What's the housing market doing? How does the Fed rate cuts and all that affect everything, and more. So you definitely want to stick around to the end. We're going to have a lot of good information, but Todd, yeah, why don't we start with that first one? What do you think? I know we get the question very commonly asked: should a buyer, I guess especially a first time buyer, should they wait for the mortgage rates to come down, or what would you advise them on that?
Yeah, that's a great question, Doug, and common. Um, the hard part about that question, I'd say initially, is no one can predict the market, and if we look at the last, I don't know, 5, 10 years as kind of what happens, house prices have gone up dramatically. So had somebody been waiting for rates to come down during that time frame, and rates had, going up every year in the last 3, 4, 5 years, um, you know, they would be sorely mistaken and challenged because the prices of the homes have gone up so much in that meantime. They would have been better off to just buy the house at whatever the rates were at that time, find the right house, make sure the payment's affordable, and then hope for the best later and for the market to change and for in a downswing maybe refinance or some version of that. But yeah,
Yeah,
waiting for rates, in my opinion, is not tend to be a great plan.
yeah. No, I totally agree. I think it's I mean, you can never time it perfectly, like you
Yeah,
mentioned. Like there's no like if we could, figure that out, I mean, everybody would be in a much better spot, but there's just no way that you can time it perfectly, knowing exactly when they're going to come down. There's so many different factors that go into it, that a lot of people don't know about. I had no clue until I got into real estate. What did I care about what the Feds were doing with the rate cuts and how does that affect anything? But yeah, that's what I wanted to get into and talk about too. But based on that, I mean, what? So I kind of mentioned just now the Fed rates. How does that work, and how does, if you can explain it for our audience here, how does that work? How does that affect the interest rate in the overall housing industry?
yeah, no, great question. So, real quickly, not to get too deep into the economics because I'll get way beyond my ability too. But simply put, the Fed has two mandates. The Fed's trying to keep max employment in the country, and they're trying to keep inflation in check. And so, the Fed uses a myriad of tools, but interest rates being one of them, to either spur the economy to regain growth or to slow the economy down if it's overheating. So technically, what we are looking for as it relates to mortgages is if inflation is high, which presently the inflation is above the Fed target of 2%. So the Fed is not inclined to lower rates in this current environment, because if they were to lower rates, technically it could overheat the economy and make inflation worse, like what happened in 2023. But in the event the jobs picture started to look less promising, meaning there are less jobs, don't look like the economy is doing very well, if not as many people are being hired, and we're falling short of our job expectations, then the Fed would say, okay, well, we might need to lower rates to spur growth in the job market. So they'd be lowering rates for a different reason, not to slow down inflation or anything else, but just to have job growth. And so, right now, I think we're in this weird spot where the Fed's doing an interesting tap dance. We've got what appears to be a pretty healthy job environment, although not perfect. It's a little confusing. And then we also are seeing inflation slightly above target. So I think everybody in the mortgage and real estate space wants the Fed to lower rates under the belief that that's going to help mortgage rates. I think if the Fed were to do that too early, that could actually cause the opposite effect in mortgage rates, and we could see rates rise, like I said, like we did earlier. But yeah, so I feel like, but in a broader scope, I do, I can't predict the future. None of us can, but I do feel like some of the new economic reporting that the Fed is proposing to be using moving forward with the new Fed chair, Kevin Warsh. He's got some interesting ideas. So I'm optimistic that we're going to start to get a little bit better data for the Fed to be using, which will enable us to have a lot less of these wild revisions to economic reports. And I think that's been the challenge we've had these last however many years is, we get these weird economic reports that say all these jobs are created. And so the Fed acts on that information, and then we find out 6 or 8 months later that that information was totally out of whack and not at all accurate. And so, I look at that and say, geez, for the last 6 or 8 months, people have had way too high of mortgage rates. Had we gotten the real data earlier, boy, we would be in a whole different picture. So I have a feeling some of that's going to be getting sorted over the next year, 2 years. And that'll give us more real-time data for the Fed to respond on. And I think that honestly is going to help mortgage rates. But for the meantime, we're still on the wait and see approach until we understand how this new Fed metrics and the way they're going to measure some of these things are going to pan out.
Yeah, absolutely. Yeah, and speaking on interest rates too, I mean, I'm sure everybody's heard the expression, marry the house, date the rate. What is your opinion on that specific advice? I mean, do you agree, not agree? I have my feelings on it. I want to get your take first.
Yeah. I mean, in a general sense, I agree with it. However, that's not I don't want to encourage people to go out and have a grossly uncomfortable payment today under the belief that mortgage rates are magically going to be amazingly better in a year. That would be irresponsible. But if, I think the reality is for a lot of people right now, and we see it, if interest rates are hovering around 6.5 to 7%, we see a little bit more sensitivity to that. And then when we see rates drifting between 5.99 and 6.25, we see an immense amount of willingness to go buy homes. So what I'm learning, Doug, is that it really isn't about the payment. It's a psychological thing oftentimes about the rate. If the rate appears high relative to whatever that person believes, they're going to be more tentative and nervous. But if we were to actually do the measurement of what their monthly payment is at 675 versus 599, it's not that big of a difference. It might be a couple $100 a month, $200 a month, in which case most clients are not going to avoid owning that particular home for $100 or $200 a month difference in payment. But if psychologically they believe it's a bad time to buy a home because rates are terrible, that will cause them to make a decision. And I think that's where it brings it back to meeting with your lender. And instead of allowing that fear and anxiety to take over your decision process and get to brass tacks and really look at the numbers, people, once they discover that and work with a good lender and a good realtor, they figure that out pretty quickly.
Yeah, no, I agree. I had, I think it sounds great. It's a great saying, but I think if you focus more on like how we do with our clients, if what I try to figure out with them, specifically first time home buyers, because I think that rates might affect them more than any other. I mean, it affects everybody, but I kind of help them figure out like, all right, where is your comfortable monthly payment going to be? Like, let's just not even think about rates right now.
Yeah.
Like, we may not ever see 3 again. I don't know. Like, let's forget about what happened a few years ago. Where do you want your monthly payment to be? How much do you have in the bank for a down payment and closing costs? And then we'll just reverse engineer, basically, also factoring in you need to buy groceries and like all this other stuff, making sure that you're not becoming house poor and lose quality of life just to buy a house.
Yeah.
So I think that it's a good, like, obviously, if they come down, refinance. But I think it's more important to find something where you can feel comfortable with the monthly payment if it never comes down in the 30 years or however long it takes you to pay it off. I think so it's a good saying. But like you alluded to earlier, don't buy a house anticipating that you'll be able to refinance in a few years, because that's where people find themselves getting in trouble
Yeah,
financially.
you got to make sure that the payment you're taking today works. It may not be, you may not be in love with it and obviously wish for it to get better, but you still want to be responsible, to your point. And the other thing, just to add to that, is everybody does a 30-year mortgage in this country, but the national average for the life of a mortgage is 5 to 7 years. And so everybody assumes they're making this massive life-changing decision, and I value that, because hey, they're borrowing a bunch of money. We want them to treat that with a lot of gravity, and be careful about how they're doing that. I'm not trying to make light of it, but they're also, if you don't love the mortgage in a few years, you can refinance. Or if you don't love the house in a few years, you can move, you can sell. We obviously want to limit that, because buying and selling homes isn't necessarily the least expensive thing you can do. But at the same token, it's oftentimes it's rare that people will buy a home and just sit there and plug away at it for 30 straight years. That would be the exception, not the rule.
Yeah. Yeah, exactly. And just a little bit more on the rate. I mean, the other answer I have too is, if somebody, again, kind of more affecting the first time buyers, but if somebody's renting right now, I mean, would you rather pay 6, 7, 8% than 100%? Because
Yeah,
right now you're not building any equity. So,
right. You're
as
paying somebody else's mortgage.
and it's not even like renting's cheap nowadays. I mean, it's grown just like the housing costs have. But at least if you're getting in a house and you're building that equity, you got something building financially for you, and you're not paying somebody else's mortgage. But so I think that kind of goes into the next part here, is like, with we're located, primarily we do Bucks, Montgomery County. I'm more Bucks, and a little bit of Montgomery. You're kind of maybe the both
Yeah,
pretty
whole
good.
southeastern Pennsylvania.
Yeah, yeah. So what are you seeing in the market right now for buyers? We keep hearing other real estate gurus saying it's going to crash, and it's turning into a buyer's market and stuff. But they're speaking more nationally. So in the local market, what are you seeing with buyers? Are they having more success? Is it a buyer's market? Do you think it is becoming one? If not, like, what are you seeing out there?
Yeah, that's probably one of the most common questions. All the fear mongering on social media about it's a bubble and all of that.
It's
Um,
great clickbait.
Great clickbait. That's
Yeah.
right. And listen, and I'm sure nationally there's a handful of markets that are maybe in that's accurate. I don't know, but in our area and a lot of the reports that we're reading, it's really not even just southeastern Pennsylvania, but it's the entire northeast corridor. It has a lack of inventory, and so listen, real estate is about supply and demand, and no matter what else is going on in the world, rates, you name it, if there are not as many homes to buy, and there's an enormous number of people in the Northeast trying to buy homes, prices will remain elevated, and it will remain a seller's market. So, what I am noticing locally is, that there's been a slight, I'll say, easing. So, if you look at the pendulum swinging all the way to a seller's market, it's just, I feel like, ticked a hair back towards buyer's market, but it's in no way stretch a buyer's market. It's just maybe slowly headed in that direction. So I feel like real estate agents, and Doug, I'm sure you're seeing this, you have to be really careful about the way they're pricing their listings. 2, 3 years ago, people could throw a house on the market at some insane number, and it would just fetch 100 grand over that number and just blow everybody's minds. Nowadays, it's like, if you price that at the top of what you believe that home to be worth, it might sit for a little while, and then you're in a price dropping having to drop your price to get everybody's attention. And sellers are aware of that, because there's a little more inventory than there was a year or two ago. So they have a little bit more options. But man, we're still seeing prices, somebody prices a home correctly, like a lot of these agents are getting wise to do, and we'll have 5, 6 people all bidding on it, and it goes for $100,000 over the list price. So that is happening, still relatively common, It's just not on every deal like it was a few years ago. So
Yeah.
is
Yeah,
that
I'm seeing the same thing. I think you hit the nail on the head. I think speaking from a seller's perspective, I mean, I think it's way more important, like you already mentioned, way more important now to get the price right from the beginning.
100%?
Because everyone's like, with being used to how it was the last, basically since COVID,
Yeah,
where you list a house and, if it's even within range of what it's worth, it'll be gone in like 4 or 5 days.
yeah,
I think now buyers are seeing like, all right, this house has been sitting for 2 weeks. Like, what's wrong with it? Like, it used to be, before it became this crazy seller's market, when it was balanced or even a buyer's market, it's like, oh, it's only been on the market for 2 months, like that was still new. But now it's like 2 weeks. They're like, okay, what's wrong with it? It's either way overpriced or something is astronomically wrong with it. Like what's going on? So
yeah,
I think from a seller's perspective, uh, pricing it right from the beginning is way more crucial now. And something that I think is actually helping our industry a little bit is all of these, kind of a different topic, but just touching on all of these agents that got licensed when the market was just crazy and they could just list a house and have no skill whatsoever
yeah,
to get it sold, but really never learned, you know, now that inspections are starting to happen more frequently, like how do you negotiate that on your seller's behalf, all this stuff. So I think that these part-time agents or, they just got in for the gravy train, they're letting their licenses lapse, and, all of the ones that do this full time and, make a career out of it, we're now, kind of reaping the benefits of all of that,
yeah.
because we actually know what we're doing,
You you hit the nail on the head, and it's listen. I've been doing this for 25 years, and it's ironic, like in an age where everybody's afraid AI is going to come and take their job, both in in every job, but mortgage, realtors, everybody's got that anxiety. I have never seen it be more critical to have a professional real estate agent to be successful in this environment, whether you're a seller or a buyer, than right now. It's and I've witnessed it dozens of times where I'll see a client start with, somebody that they met at an open house or got from someone's Zillow or whatever it is, and they discover that agent, after a myriad of times or a number of times trying to either go see homes or write offers, they're just failing and they're not getting anywhere. And after months of frustration, they end up getting introduced to a more professional agent and or lender. And in my case, I've gotten introduced to these people. I just had a recent story where these clients had been looking for homes for I think he told me 9 months. I met him at my son's birthday party, wonderful couple, and they were so frustrated. But essentially, they were out there writing offers with 3 or 4 components of their offer that are non-starters for virtually every seller in today's market. So when I met with him and shared that with him, he's like, I don't know how my mortgage person let me do it this way this whole time. I've wasted a year of my life. And on top of that, his agent let him do it too. And so, getting better guidance from us and from their new agent, they were able to get to a place of an agreement of sale overnight. And so that's, I think, a testament to doing the right things and preparing correctly and working with professionals, to your point, not working with some weekend warrior who's also got another full-time job. They're kind of just trying real estate on the side. That's paying dividends for people who are working with professionals, without a doubt.
Yeah. Yeah, that's a perfect segue into the next question here, which is, I know you and we have our process, we work well together. And, we obviously know the importance of, if someone's looking to buy a home, both individually and collectively, we'll sit down and meet with them and really understand, what do they have to work with? What are they trying to do? What options are available to them, and really kind of prep them into, okay, exactly what to expect, realistically what you could buy, whatever you're looking for, the price range and all that. So how, I know you meet with clients individually, face to face, or at least, via Zoom call, and really understand, um, you know, their situation and what they're trying to do. So what does that process look like a little bit from your perspective in prepping people who are trying to buy a house?
Yeah, I think it's a subtle difference in what I do, say, versus a lot of my colleagues. But I think it's something I stumbled on early in my career that has been kind of the secret sauce to some degree, and it's the most important thing in my opinion for clients, just like meeting with their realtor up front to say, these are the things that are important to me. I want to live in this type of property or in this school district, and I want to have this many bedrooms and bathrooms, and I need to have all these kind of wish list of things that are important to them. The same is true about the financing. I don't think a lot of people think about that, right? And so they end up later in the process, discovering that they don't know anything about the financing, and they're totally anxious, and they're not confident, and that's a horrible way to buy a home. If you're out there running around trying to make all these decisions on your own, or you're chat GPT and ideas, and you're getting advice from family and friends and the internet, you're kind of going to be flying a bit blind, and that's going to be a pretty anxiety-filled process for that person. But when I meet with people, um, I sit down with each person up front after we've gathered their information, and we really walk through a step-by-step process of like, where do you want to live? How much do you want to spend? How much money are you comfortable parting with? And then we share with them financially what that looks like with regard to a mortgage payment and cash due at closing. Go through all the questions and concerns so that that person really goes, wow, this is no longer a mystery to me. I get it. I understand why I'm using this type of mortgage because of my credit or my income or my goals. And I understand that that's a good thing. But I also recognize now that although I thought I could qualify to buy this, when I add the taxes and the insurance and all the closing costs to that, that might be a little uncomfortable for me. So I have to back that down a little bit, or whatever that is for each client. But being able to really break it down for people in layman's terms and make sure that they really understand it, and not just send them a text message or an email saying, here's your pre-approval, you're good to go, and avoiding any explanation, which is unfortunately too common in my industry, I find gives that client a lot more confidence in themselves, and then it gives them a lot more clarity as to when they're out shopping with their realtor, they're in a decision where they can say, hey Doug, I love this house, and I already have my information from my lender, from Todd, and I already know I can afford it, so I'm cool writing whatever that offer is necessary to make it mine, to beat out the competition. But without that clarity, people are wandering around houses that they're falling in love with emotionally, and then later have to back into it financially to figure out if it's comfortable or not. That's a very confusing process. Better to learn your numbers, learn your stuff, and know what that is for you. And then when you see homes, our process is such that when people see it online, they email me, as Doug, and then I send them updated numbers for that specific home, so that before they even invest their afternoon to go see it, they already know what it's going to be monthly, and how much money they're going to have closing to buy it. So I think
Yeah.
that's been a big help for our clients.
Yeah. And it's a help for, from a realtor's perspective for me too, because I
Yeah,
can't tell you how many times, I've been in the business 10 years now. How many times where, somebody just gets a pre-approval or even a pre-qualification letter, which we can talk about the difference
yeah,
later on, but they just, get pre-qualified for a certain amount, and they're never shown any numbers on how much out of pocket it actually is going to take to buy the house.
yeah,
And then how many times do I, like me being the realtor, and we're going to like, all right, cool, you want to look at this house, like let's put an offer in, here's what your closing costs will be, and I kind of look like the bad guy being like, you can't afford this because like this is the actual closing
right,
costs. And so it's like, I mean, thankfully, I explain everything up front, and that's also the important, like, why I always stress there's a lot of agents out there that just use their lender's closing costs as their own closing costs, and I always do my own, because especially if it's a lender I don't know,
yeah,
because like I know your stuff, because we've been working for years together, Um, but like, there's plenty of lenders out there, just like those part-time realtors. There's part-time lenders. They don't really know everything that goes into buying a house yet, just because they have their license. As concerning as that sounds,
Yeah.
but to the industry overall. But yeah, it's just one of those things where I always feel like I'm the bad guy. Like, oh, you're pre-approved for 500, but you can really only afford 400.
Right.
So like we're either wasting time seeing houses they can't afford and they don't even know it yet. But it's
And
like, and that's why I think it's just so important for people to, before they even step foot in a home, um, you know, open houses are a different thing, but before they start really intentionally looking for a house to buy, meet with both the realtor and the lender to understand both sides. Because obviously, you're the mortgage expert. You can talk those numbers, the interest rates, all these different things. And then obviously I know the real estate market, so I can tell like, hey, realistically, you could buy this house in this range. This is how you're going to get it. These are the contingencies, all that type of stuff. But yeah, it's not funny, but it's always like, I don't like being the bad guy, being like, no, you can't actually afford it because this is your out of pocket, and they're just totally blindsided because they've never seen that before. I think
yeah,
recently you just talked about that, you know, with some other clients where they just didn't understand how much it would take to actually buy.
100%. I mean, one of the simplest things is, and it's one of our big clarity points in our meeting, is clients over the phone when they're entering in their information online, like when we're trying to get them scheduled for our appointment. A lot of clients, very common, they'll say, my team will ask them, hey, did you have a sense of how much money you wanted to put down on this home? Kind of what was your budget for down payment and closing costs? And they'll say, oh, we're going to put 20% down. And then we'll dive into it, and they're asking for, say, a $500,000 sale price, 20% down, and we'll look through everything, and they have exactly $100,000 to their name. So in their mind, they are 20% down buyers. They aren't aware that they have to have money left over when the transaction is done. They also have to have closing costs, which are going to be on top of their down payment. And so in reality, maybe they're only 15% down buyers if they're going to use all $100,000 in that example. And so we have to walk them through that, help them understand it, because too many people, like you had just mentioned, haven't met with their lender, have no idea about any of this stuff, and they've been provided a pre-approval with no explanation. So they're armed with a ticket to the game that they don't know how to play. And then they get there, and you're like, hey, okay, you good to buy this house? And then all of a sudden, now they have to look at those real numbers, and they start to panic and say, wait a minute, I don't understand all this. Why is it so different? I have my 20%. Why isn't that sufficient? And that's becomes very uncomfortable and puts a very awkward situation for the agent and for the client. So not a great way to go. I would mirror it, Doug, like you wouldn't, as a real estate agent, if a client called you that you've never met, you don't know anything about them, you don't know where they want to live or what they want to do. If they just called you out of the blue and said, "Hey, I'm thinking I want to go see this house out in Bristol this afternoon. You want to go see it right now?" You'd be like, "Well, let me learn a little more about you first. Why are you looking in Bristol? Who are you? What are you trying to do?" You'd want to gather a little bit of details about that client to say, well, geez, I'm happy to show you that house in Bristol, but the reality is like that might not be doing you any favors, right? The best house for you might be over here, and you may not be aware that it exists. But as your realtor, I have to understand kind of your goals and your objectives here so that I can make sure I'm guiding you to the right path to get what you're looking for. The mortgage equivalent to that is just, hey, I did everything in the background and pre-approved them and issued a letter and said good luck. That's a horrible.
Yeah, you kind of touched on one of the reasons why I don't like Zillow so much is because they just people just they don't understand. First off, they don't understand that when they hit that I'm interested in more info, they think they're gonna get a call from the listing agent, but they're just getting a call from whichever realtor is paying the most for their information. You know,
Right.
that realtor more than likely knows nothing about the house you're calling about. So anyway, that's a whole different topic,
Yes, yes, it
um,
is.
but yeah, so that's you touched on that, and you also touched on, like, bringing up 20%. Um, I'm sure you still hear this all the time. I still hear this all the time. The question of, is it still the best to put 20% down to buy a house now? I have my thoughts on it, which I'll elaborate afterwards, but I'd love to hear, what would you say to someone who asks you that question? Should you wait until you have 20% down?
Great question. We get it asked all the time. And the short answer is if you can part with that much money to put 20% down, if you have the resources to do that, amen, right? It'll save you some money and you'll avoid the mortgage insurance. But candidly, now more than ever, the mortgage insurance costs for well qualified buyers are so low, it's so affordable that it no longer is this like, you know, amazing destination of 20% down. Most of my clients, once they learn what it costs at 10 or 15% down, oftentimes will put less money down on the home, preserve some of their cash for carpet and paint and renovations, or just having some emergency fund, and they'll pay that insignificant amount of mortgage insurance each month. And that's another big part of our meeting. Not to harp on the meeting, but we like kind of showing people that so that they're not kind of blinders on 20% down all day long, not understanding what the benefit is. We joke around that a lot of people come into that meeting thinking of PMI like the boogeyman. They don't know how much it costs or what it actually is. They just have been told by everybody that it's this huge expensive thing, and you got to avoid it like the plague. And then once they see it, they're like, well, wait a minute. So you're telling me I can buy a house with 10% down and the penalty is 50, $60 a month or whatever their PMI is. And they're like, yeah, okay, well, I'm not going to continue living in my parents' basement trying to save every penny for the next 3 years to get to 20% down. I'm going to go buy my house right now, right? So that's a very common discovery. So in short, yes, put as much money down as you can, but make sure you're leaving yourself with enough money. One of my rough little advice that I give people is put enough money down until your monthly payment is comfortable and no more. Because a lot of people, kind of will get to say even 20 or 30% down and they'll be like, hey, I've got another 50 grand. Should I apply that, Todd? Does that make more sense? And I'm like, well, is the monthly payment affordable at 30% down? And they'll say, well, oh yeah, it's like no big deal. I'll say, well, then keep your 50 grand, go invest it. You're paying whatever 6.5% on your mortgage, which is tax deductible interest. And so, if you can make 7 or 8% or 10% in the market, I'd invest more money and, keep your mortgage where it is, and you're going to do just fine. So, yeah, 20% down is not the milestone it used to be, in my
Yeah.
opinion.
Yeah, no, I agree. And, I enjoy working with first-time home buyers. I work with a lot of them. And I get that question all the time, mainly because, their parents, that's what they were always told, and that's what they did. They're like, no, you got to wait. You can never pay PMI. It's just a waste of money. I hear, you hear this, all the same things. But, my other point with that too is like, all right, let's just do some basic math. Let's just say you're looking at a $500,000 house. Last year at this time, the year over year growth has been 6.1% appreciation for Bucks County. So if you just do the math, 6% of that, I mean, that's $30,000 in equity that you missed out on because you're trying to save. So in my opinion, most people, especially first time home buyers who maybe they still have student loans, car loans, whatever, they can't outsave the appreciation
Yeah.
of this area in this market. So I always say, again, I think the most important thing is figuring out what's your most comfortable monthly payment, and then dissect everything based on what you have to work with from there. But, I think what I help a lot of buyers understand is obviously everybody wants to go for that, forever home right away. I think what I'm seeing and what I'm helping a lot of first time buyers realize is instead of everyone wants to go for that forever home right away. But instead of doing that, let's just get you into the market. Like, let's just
Yeah.
get you a starter home. Let's get you something, you know, maybe down the road it could be a rental and it could help you buy that forever home a little easier. Or you just start building that equity, stop paying your landlord's mortgage, and making him rich, or her, whatever, but making them rich, and then you can start building that equity and upgrade, when the numbers make sense at that point. Um, so I think it's just, the whole, you need to have 20%, like you mentioned. Yeah, if you have it, great, do it if it makes sense for you, but it's not a necessity. I think the last time that I ran closing costs, I mean, probably with you here, was, the PMI ended up being like $50 a month.
Yeah.
Like, so it's so cheap, like you mentioned earlier, so cheap nowadays that like you're gaining way more than that monthly in equity. Like $50 a month is pennies compared to the equity that you're building.
Yeah.
Obviously with the way the market's going, it can change, but currently how it is and how it looks like it's going to keep trending in the local Bucks County market, at least, um, I just think it's just, in my opinion, silly to be like, oh, I have to save up 20%, because it
Yeah.
could take you 5 years to save up 20% of what the house was worth 5 years ago.
Yeah.
You know?
100%. Yeah. We see it too, where, just a side note on that, you kind of got me thinking about like how appreciation, you can't outsave the appreciation. We get a common question about, hey Todd, how do I come up with the money for closing? I have this much in savings, it's a little insufficient for what I want to do, and I don't have access to a family gift. And some of these people will say, does it make sense to borrow against my 401k? And there's an aversion to do that for most people because they're like, wow, it's my retirement. I don't want to steal from that. But oftentimes what we find is, people are borrowing out, say, $10,000 out of their retirement account, and they're doing it as a loan against their retirement. And so there's no penalty and there's no tax for that. And essentially then that using that money to enable them to buy a home. And what's interesting is a lot of clients, once we show them the math, they're able to say, wow, okay, it's not as big of a deal with my retirement as I thought it would be. They have this provision in place specifically for home buying. But in addition, if you said, okay, just keeping that money in your retirement account, 10 grand, if you have like a great 401k that's earning 10%, you're earning $1,000 a year on that 10 grand. But if you go buy a $300,000 house that's growing at 6%, you're sitting there saying, okay, well, I traded one investment for another, and this new investment, this new asset I've purchased, got me $18,000 of appreciation this year rather than $1,000 of growth in my 401k. And so when you start to weigh those advantages, obviously buying a home makes a whole lot of sense. Now, I always joke around and say, listen, if you were pulling that 10 grand out of your retirement to go buy beer and jet skis, that would not be a responsible use of the funds, right? But
Might need to talk to a financial advisor at that
right,
point, but yeah.
right. But if you're going to buy a house, and that house is likely to grow in equity and it's going to prevent you from paying rent, amen. That is going to be a very sound financial decision. So I'm not a huge proponent of rating retirement funds, to be clear, but in lieu of, if that's your only option to buy a home to make home ownership possible, it is 100% a very viable place to look for additional funds to pull from.
Yeah. And that's, again, just going back to the importance of both meeting with your realtor and then you, like the lender, and
Yeah.
really figuring out every single option that you may not realize you even have. Like that
Yeah.
one, a lot of people, you're taught never, ever, ever touch your retirement account until
100%.
you retire, which I feel like for a lot of cases that should be true. But in this case, if you want to buy a home and you're renting forever and you just do just basic math to figure out, like, okay, it does make sense to pay the penalty to draw some early to buy a house that'll eventually, pay me back
Yeah.
more than the 401k or whatever you're
And
borrowing
listen,
from. Yeah.
and done correctly and done with in advance or planned out, oftentimes people will have already called their 401k or whatever that their retirement fund might be, and they'll learn that there isn't a penalty and there isn't a tax to pay. And so that's why in our meetings, we like having clients just really understand all of their resources. Doesn't mean they're going to use it, but if you're tight on cash and you think, okay, geez, as long as I buy a house in this range, I should be good, then buying that property will. Laura, come on. Sorry, buddy.
This is staying in it. That's she. Now she's in it. Now she's in it.
Oh, Lord, help me. Anyway, buying a house, kind of getting back to it, buying a house with, using your retirement funds. If you're trying to make that type of a decision on Saturday night, you just found your dream house and it's 20,000 more dollars than you had kind of thought you wanted to spend, but in the back of your mind, I can get 30 grand for my retirement with no penalty and no tax. You might then say, this house is worth it. It's the best home we've seen. We've been looking for months. I know how that process works, and I'm comfortable making that decision. Amen. Go do that. But man, your 401k company or your IRA is not going to answer the phone on Saturday evening to walk you through that process and help you know that. So you have to have some foresight and have that all done long ahead of time. And that's kind of a big part of our meeting is let's figure out where all these potential sources of money would come from, and to make sure that in a pinch, okay, if I had to do this, I could get that or whatever that might be. So you're prepared to make those decisions. Because Doug, you when you're working with your people, it's never at noon on Tuesday where they're like, oh, I have all the time in the world to make the decision to buy this house. It's Friday night at 8 o'clock. It's Saturday morning at 10
Or
a.m.
just last night at 9:30 p.m.
Yeah.
So yeah, you gotta be prepared to work when you need to.
Right.
But yeah, so let's get back to like the actual buying a home process. Another question that I still hear all the time, understandably, but do buyers do they need to expect to still waive everything to get a house? Are you still seeing, I know you work with a lot of realtors. I know what I'm seeing out there. Um, do you think that it's not possible for people to still get home inspections, or they have to cover, $100,000 appraisal gap? What are you seeing out there in the current market right now in August?
Yeah, so I'll say in general, I'll answer this two ways. First is, in short answer is, I'm starting to see more openness to home inspections. I've even seen a little bit of seller's assist lately, which is crazy. So it's not the normal. It's definitely still the exception, but it's happening. Whereas there was a good year or two there, that wasn't even happening. But I'm also kind of, when I back off of that and say, a lot of times the home priced correctly, there's still that competition. And so what I've started to advise my clients to do is, once they've identified the home, say Doug with you, and you guys have determined it's the right house, suits their needs, financially it's comfortable, they kind of have to shift gears at that stage and say, how do I make myself the most attractive to the seller? How do I pose the least amount of worries that this seller is going to be concerned about? How do I make myself like a guaranteed deal to them? And so a little bit of that is price. And so you got to be, in the right range. You don't have to be the top number. I don't know if you agree with that, but then I think other little things add to that. Having, in the event you're comfortable waiving a home inspection, that takes the fear off of the seller that you might nickel and dime them or find some reason to get out of the deal. Doesn't mean that you have to waive it, but it's something that the seller is worried about. So if you're comfortable waiving it, and as you know, Doug, you and I have ways to kind of circumvent that. But and then the other thing is like having a large down payment on your home, right? If that's evidenced on your approval paperwork that you have a large down payment, it gives the seller confidence that you're more durable. If an appraisal were to come in a little low, that might blow up a less qualified buyer. It might prevent them from being able to buy the home. But for somebody who's putting a large down payment, that would give them some strength in the eyes of the seller, that they're more durable and they can survive. The transaction will survive that type of challenge that nobody can project is actually going to happen or not. So, and then the mortgage approval, basically just having that mortgage fully approved, which we've been doing that a lot these last few years, which is unique. Having that mortgage fully underwritten and fully approved rather than pre-approved gives that buyer just that little bit of extra edge in the perception of the seller's minds that, wow, okay, the mortgage is done. There's no potential for us to find or discover some aspect of this person's, pay scale or something that prevents them from obtaining their loan later. These folks are good to go. They can close in 10 days, and all we need is an agreement of sale and appraisal. So every little thing you can do as a buyer to just whittle away at the worries of the seller and just alleviate those concerns is going to make you more likely to get your offer accepted.
Yep. Yeah, exactly. And I know we could probably talk for another 5 hours, but I know we time's running out here, so we do have to go. But maybe the next episode we'll have you back on, and we could talk more about actually getting into the weeds of what makes a good offer financially to a seller. How do you make your offer stand out in a competitive market, like the one we're still in. But yeah, we'll see you on another episode here. I appreciate you coming on. And
thanks for having me, Doug.
Yeah. So hopefully, if you're watching this and you found value in it, if you wouldn't mind just subscribing, it helps my channel a lot more than you think. And if you are looking to buy or sell in the area, if you're looking to buy, you can reach out to Todd or myself. Todd can help you with the lending part. I can obviously help you with the finding the home part. And we'd love to work with you. But appreciate you watching. We'll see you on the next episode.